please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the big stock in focus today will be Kotak Mahindra Bank. It's issued non-convertible, perpetual, non-cumulative preference shares worth 500 crores. This is likely to have been done to meet RBI's mandate of lowering promoter stake to 20% by December 2018. Datta is here with the details this morning. Datta, over to you.
Okay, well, first the numbers. It is a non-cumulative, non-convertible perpetual preference share. So the person who has bought it for all of 5 rupees. And the total amount is 100 crore shares. So the total paid up capital because of that will be 500 crores. Now, here the difference is between paid up capital and equity. In paid up capital, if you looked at the paid up capital, then Uday Kotak's share, the promoter share, falls from about 30% to a little under 20%, and that he has to do because of the Reserve Bank rule. So total number of shares is 190 crore. Before the preference issue, you add 100 crore to it, it becomes 290 crore. And because of this 30% increase in the overall capital, Mr. Kotak's share falls by the same amount from 30% to a little under 20%. Now the point is the communication to the exchange says with this the promoter stake has come down as per RBI requirements to 19%. Now, I think there will be a legal squabble between, whether you are looking at paid up capital or the number of shares. The RBI agree. Now, we don't know the RBI agreement or license wording to Mr. Uday Kotak when the license was given. If the wording was paid up capital, then Mr. Kotak's offer is kosher. But if it was equity, then it may not be kosher because these are not voting shares. Preference shares are always non-voting shares. Otherwise, why would you get them for 5 rupees? If they are voting shares eligible for a dividend, they will be available at whatever is the current price, and with a premium, it would have cost the buyer 1,300 rupees. So obviously they are non-voting shares. So will they be regarded as pari passu with the common equity share? That is the question which I think all the legal mandarins in RBI and outside RBI will squabble about. See, the spirit of the law while giving the licenses, that no one person should have a dominant voice in the bank. Now, Mr. Kotak is a man whose banking credentials and whose integrity is above board. But what if it were the Tayals of Bank of Rajasthan, where the Reserve Bank was very keen that you bring down the stake because the fear was they are giving loans to their own directors and to their own relatives. You don't want that to happen. So that's why you don't want a promoter to have too much of a voice. This is a common individual's deposit, and therefore it should be guarded. That's why you have fit and proper rules. That's why you have rules that no one can hold more than 15%, 20%, rules like that. So now the whole issue is in Reserve Bank's court. It is possible Mr. Kotak would have sounded the Reserve Bank. It is possible he has just, he's in a hurry because he's running out of time. And in no way on earth is he going to find someone to buy that many shares without, an overhang on the share itself. So did he use the legal niceties of the agreement, or was he, aware, or did he ask RBI sound them out already? But we will have to see how RBI responds to this.
Okay, all right, Lata. Thanks so much for that. Well, the Allahabad High Court heard the power companies in their plea against the RBI, seeking that banks don't take them to the NCLT as ordered by RBI's February circular. The court heard their arguments and has set August 9th as the next date for the deadline. So we'll keep an eye out on that as well. But let's move on and let's tell you about earnings expected today. Mangalam's with us early this morning. He's going to tell us about Titan. Mangalam, you have that grin on your face. Is it for Titan? Are you popping the ring this weekend? No. The grin on the face.
No, the grin on the face is because, I don't know what to do. First there's jewelry, then there's Maggie, and then there's painting the house. So I don't know, where to start. But for Titan itself, tell you what, just like we went to exams with a bit of a cheat sheet in school, Titan gave us a cheat sheet ahead of the numbers. They've said, the first quarter is not likely to be so good on account of 2 reasons. The first one, there's a massive base. Remember the last year, same quarter, jewelry business grew upwards of 50%. Add to that, the demand was a little muted because there were few wedding dates in this season, this quarter. So after Akshaya Tritiya, we saw demand slackening out there. So add all those things together and the fact that the stock is about 10% off its record high. Here's the expectations that we have from Titan this quarter. Revenue up 10%. That is what our number, that is what our poll is throwing up in terms of the revenue. 4,300 crore thereabouts is what the expectations are. Margins are likely to improve. So the EBITDA is likely to grow by about 19%. 463 crores is what is on the cards. That means that a margin improvement of close to about 100 basis points, around that 10.8, 10.9% is expected. Net profit on the back of improved margins likely to grow by about 20 percentage points, 20% that is. Growth in the jewelry segment is seen between 8 to 10%, could be a little more than that because the management has already alluded to the weakness on account of a high base. Margins are likely to expand, and the most important thing to be watched out for is the share of studded jewelry in the jewelry segment. That would improve their margins going forward.
Okay, and what about Nestle?
Well, Nestle, ahead of results, like all FMCG companies now have started sounding like a broken record, is at a record high, trading at 54 times FY20 earnings. So Nestle, remember, is the stock that trades at the maximum premium in the sector itself. And a very good set is expected for Nestle. 13% thereabouts is the revenue growth which is expected. For Nestle, the important part will be margins, because a gross margin expansion of close to 100, 150 basis points, sometimes even 200 basis points is expected. That's primarily because majority of its input prices, the likes of milk, sugar and wheat, have been lower year on year. So it would be a gross margin-led expansion on the EBITDA margins, and on the back of that, we're expected to see a huge jump in the net profit itself. For Nestle, the important part, however, apart from top line, will be the kind of other expenses that they show, because the company has launched about 45-50 products in the last 18-20 months, and new products will be the one, along with the Maggi traction, which will be leading the growth. So it will be very important to see what kind of ad spends they're doing going forward.
All right, Mangalam, tell us, what about Berger Paints? What do we expect this time?
Well, Berger Paints' double-digit volume growth is something that is on the cards. In fact, we had the management during the quarter. They had said that about 13 to 14% is the volume growth that is expected in the first quarter itself. However, the street has muted its expectations. They're working with 12 to 13% in terms of volume. Add to that about 3-4% of price hike. We are expecting a 15-16% growth on the top line as far as Berger Paints is concerned. The margins are likely to improve a little bit. That is not necessarily because of gross margin improvement, but also because of operating leverage. So that is something we will need to keep an eye out on. For Berger Paints, however, remember, the market share in the decorative business is something which is most important. So if Asian Paints is something to go by, they said that over the last a few years, they have consolidated their positions, gained some market share. Berger said they've also gained some market share as against the others. So competitive intensity, market share, as well as their outlook on margins and inventory is something that we'll be watching out for. Definitely 12 to 13% volume growth is on the cards.
Okay, all right, Mangalam. Thanks very much for that. Let's move across now and go to Abhishek, who's joining in to tell us about Indiabulls Housing Finance on its Q1 numbers.
Well, to begin with, Ekta, the results are in line with whatever management has been guiding over the past 2 years. So loan growth continues to be between 30 to 35%. It has come in at 33.4%. The spread, that is the difference between yields on AUM and the cost of funds, continues to remain between 320 to 325 basis points. It came in at 323 basis points, while the gross NPA continues to be below 1% at 0.78 versus 0.77 quarter on quarter. So the asset quality has not got impacted despite the fact that they have taken IND-AS accounting. However, the worry factor is the incremental spread on the book has been coming down. So that is a key worry factor, how the cost of funds shapes up and how much they are able to command in terms of the pricing will be seen closely. The NII grew by 32%, while the net profit came in at 1,049 crore versus our poll of 996 crores. Back to you.
Okay, thanks so much for that, Abhishek. Well, let's stick with earnings then. ONGC reported a rather good quarter. Sonal's with us to run us through all those details. Hey Sonal, good morning.
Good morning, Nigel. Where, as you rightly pointed out, the quarter was good. Except for profits, all the other parameters were above what our poll threw up. So profits, they were lower than expectations, basically due to higher finance costs, higher depreciation, higher tax rates, and also because of lower other income. However, net realizations, they were at record levels, came in at $74.2 per barrel, and we already were expecting those levels. Gas realizations were lower than expected at 3.06 MMBTU. But growth was seen both in offshore and the onshore segments. If I take you through the numbers, the revenue growth of around 13.5% was driven by the higher realizations. EBITDA also grew by 30%, and operating profit margins, they expanded by around 700 basis points. However, profits were lower, as I already pointed out, because of higher finance costs, higher tax rates, lower other income, because they had used their surplus cash to fund the HPCL acquisition. Net realizations, however, came in at the highest levels ever at $74.2 per barrel, and growth was seen both in offshore and onshore segments. But brokerages have diverse views, while Nomura thinks that they expect higher oil prices to drive around 43% EPS growth for the company going forth, but they still have this risk that the government might impose windfall taxes on the company because of the higher realizations they have been earning. Motilal, on the other hand, thinks that this company will go ahead and do more, will grow more in terms of EPS. They have a target price of 219 rupees that implies a 32% upside, and they maintain a buy rating. Back to you.
Okay, all right, Sonal, thanks very much for that. Well, as we slip into a break, here is a weather report from SkyMet.
Hi, welcome to Daily SkyMet Weather Report with Fawzia. Moderate rains are possible in parts of Uttarakhand with light showers over Jammu and Kashmir, Himachal Pradesh and West Uttar Pradesh. In fact, central Uttar Pradesh including Lucknow would witness moderate to heavy rains. For now, Punjab, Haryana and Delhi NCR would remain dry. Furthermore, rains would increase over East Uttar Pradesh and Bihar. Meanwhile, Jharkhand, West Bengal including Kolkata and North Odisha are expected to get light to moderate rain activity. Besides this, good rains are likely over Assam, Meghalaya and Arunachal Pradesh. In central region, Rajasthan, Gujarat and West Madhya Pradesh will be dry. Scattered showers are expected over northeast Madhya Pradesh, Chhattisgarh, parts of Vidarbha, Madhya Maharashtra and Konkan and Goa. Mumbai rains will remain light for now. Finally, light to moderate rains would continue over Kerala, coastal Karnataka with few short spells over coastal Andhra Pradesh and isolated activities over Tamil Nadu. Let's look at the temperatures. Delhi would have a maximum of 34 and minimum 28 degrees Celsius. The maximum temperature in Kolkata would be 31 and minimum temperature 25 degrees Celsius.
Let's stick with some stocks that came out with numbers overnight. Cognizant, they reported their quarter two numbers yesterday. The stock was down nearly around 5.5 to 6% overnight. Rima is with us to run us through all those highlights. Hi, Rima.
Hi, good morning. Yes, Cognizant stock was under pressure. I think it finally ended about 6.5% lower. Revenues and profits have come in lower than what the street was anticipating. Their revenue growth at 2.4% on a quarter-on-quarter basis was one. It missed street expectations, and secondly, it was at the lower end of the company's guided band. Their margins at 22% were higher than estimate. That said, the company holds on to its full-year guidance of 8.4 to 10.1% in terms of a revenue growth, with Q3 guidance coming in at 1.3 to 2.3%. Financials actually didn't do so well for Cognizant, so that's a bit of a worry. So the growth in financial services was only 0.5% on a quarter-on-quarter basis. You look at it on a year-on-year basis was 4.5%. That said, the management has indicated that it is beginning to see some growth return from large financial accounts in North America, though there is a little bit of a problem pocket in Europe. But the fact that in financial clients, for financial clients, growth is coming back in North America is a bit of a positive. And remember, for the Indian IT companies, it is important to see the banking vertical grow because that contributes about 30 to 35%. So if you want good growth for the sector per se, financial services need to fire. For Cognizant in particular, the high attrition is also a worry. TCS has beat Cognizant for the second quarter in a row in terms of a revenue growth. So this quarter, TCS had a revenue growth of 10% on a year-on-year basis, while Cognizant had a 9.2% growth on a year-on-year basis.
Okay, all right, Rima. Thanks very much for that. Well, let's go across to Manglam now. He joins in with cues from the F&O space. Manglam.
Well, Ekta, yesterday was a down day for our markets, and that was reflected in the flows as well. The cash market flows, both the FIIs and the domestic institutional investors sold for the second day in a row, and yesterday that sell figure ballooned to about 1,000 crores on an aggregate basis. The FIIs, remember, day before yesterday, they bought in index futures to the tune of close to around 1,200 crores. Yesterday, they were selling to the tune of around 1,100 crores, and this despite the Nifty futures premium surging from about 28 points to 38 points. The day before, before it was just about 15 points. So mirroring images as far as the FII flows are concerned over the last two trading sessions. On the 1st of August, they added close to 11,450 longs. Yesterday, similar number of shorts were added in index futures as well. 3,350 crore worth action in the index options space. A large part of that could also be on account of the Nifty Bank weekly options expiry. But suffice to say, a lot of long positions were added. Close to around 19,594 long call contracts were added. So it could perhaps also be the shorts who are hedging themselves on the upside by buying some index calls. 11,500 call was very active. We saw some unwinding on the 11,000 put as well as the 11,300 put, the levels where we saw a bit of writing after the down day in yesterday's trading session. One stock we need to keep on our radar is Adani Power. Has been buzzing lately and now has entered the F&O ban. Add to that some long positions added on Jet Airways. That stock spiked in the last hour yesterday. SAIL too comes out with results today. Some long positions added and fresh shorts were added on Marico after the company posted their results and the stock corrected by about 5%.
Okay, all right, Mangalam, thanks so much for that. Well, let's get you some trading ideas. Then on to our bullseye corner this week. We have Samit Chauhan, Vijay Chopra and Shaina Mukaddam. They are battling out for the strongest portfolio. Let's hear out what they've picked for today.
Our first call is a buy call on Mannapuram for a target of 117, stop loss 104. Second buy would be on Jaicall for a target of 179, stop loss at 149. Third buy would be on FDC for a target of 282, stop loss 252. And final call would be a buy call on Dhampur Sugar for a target of 104, stop loss 85.
My first call is a buy call on BEML. The stock's closing price was 910 rupees yesterday. It could be bought for an intraday target of 930 and a stop loss of 885 should be kept on the stock. My second call would be a buy call on DLF. The stock's closed at 190 rupees yesterday. It could be bought for a target of 196 and a stop loss of 185 should be strictly kept on the stock. My third call would be a buy call on REC. The stock closed at 113 rupees 65 paisa yesterday. It could be bought for a target of 117 and a stop loss of 109 should be strictly kept on the stock. And my final call would be a buy call on Indigo. The stock's closing price was 965. It could be bought for an intraday target of 990 and a stop loss of 940 should be strictly kept on the stock.
My first pick is Nalco. I buy it with a day target of 70 and a stop loss of 60. Second, Torrent Power. I sell it with a day target of 215 and a stop loss of 236. Third, Just Dial. I sell it with a day target of 525 and a stop loss of 560. Fourth, RBL Bank. I sell it with a day target of 545 and a stop loss of 580.
Okay, and on that note, we're going to wrap up this edition of